If you're thinking about investing in self-driving cars or autonomous vehicles, then you're not alone because we detected unusual trades worth about $1.1 million on Aurora Innovation stock, ticker symbol AUR. And so in this video, we will analyze this unusual option activity to find out if these investors are bullish and buying Aurora Innovation or bearish and selling, because as we all know, stock prices go up or down based on supply and demand. How many shares of stock are being bought versus how many are being sold? If there's more money investing by buying, the stock goes up. And if there's more money being cashed out by selling, the stock goes down. And so without further ado, let's dive into the data analysis of these unusual trades. Now, as we can see here on the stock chart, it is very overbought on the RSI indicator. And so this is a potential risk on a technical analysis basis. However, the stock is showing very strong momentum, hitting a new high on the last trading day. And so this means there is not much of a resistance level to reject price back down. But look what happened the last time the stock rallied to a new high. It crashed back down. And so technical analysis can get confusing, giving both sell and buy signals. Furthermore, news media can also be confusing because on this day, January 7th, when the stock popped up, we can see here that the reason was because this company released news about partnerships with NVIDIA and Continental. And so, to get a clearer signal, let's analyze the real-time data of how investors are trading this stock, data that makes a bigger impact on the stock's direction. As we can see here on the options time and sales tape, the most unusual trades we found happened on February 14th at 10:06 a.m. These June 20 options at the 13 strike calls being traded for a price of $135 each. And so let's dive into the option chain to find out how many contracts were being traded in total. As we can see here, for the June 20 options at the 13 strike calls, we have a total volume of about 8,700 contracts being traded. And so we can calculate the estimated trade costs. As we saw on the options time and sales tape, these options were being traded for a price of $135. Keep in mind that options are priced per share, so we need to multiply by 100 since each options contract represents 100 shares of stock. And so each call option costs $135 each. And since there were about 8,700 contracts, we multiply that out and we get a total of $1.1 million for this trade. But keep in mind, this is a higher risk trade in comparison to the trades that we share on our website. And so if you want to get access to the lower risk and higher probability of profit trades, then go to our website. We'll put a link to our website at the top here where you can get access to better trade ideas that the wealthy investors and potential insiders are trading, because not all of these unusual trades will be profitable. Some will be a loss, but as long as we diversify our portfolio with higher quality stock picks based on stronger data analysis, then we can become more profitable in the long term. Now, even though this is higher risk, we still traded this, but we use position sizing to manage our risk. Since this was a new opening trade, we also bought these call options and got into the same position here. POS stands for our position, and the green color means a buy position, while a red color would mean a sell position. Now, how did we know these were new opening trades? Well, notice that these 13 strike call options have an open interest of 176 contracts, which is much less than the 8,700 contracts being traded. It would not be possible to close out of that many contracts if there were only 176 open contracts. This data is very important to figure out because if investors are closing their trades, it could indicate that it's time to step back rather than start a new trade. And so we always take this extra step to analyze the data at a deeper level because many other websites and scanners don't. They report all high volume unusual trades without filtering out closing trades, which leads to inaccurate results and losses for those following unusual option activity. And maybe that's why we have more winning trades than other websites. And so, based on our deep analysis of many data sets, these investors bought these call options at 135, the same price as we calculated earlier for these unusual options. And so, when we analyze this trade, you can see here on the risk profile profit loss graph where the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Note the zero break-even line here. And so when the purple and blue lines are trading below it, this trade becomes more negative loss. And if it trades above it, this trade becomes more positive, profitable, because this is a long bullish trade. And we can confirm it here on the Greeks. We have a positive delta trade. If it was a short bearish trade, it would be a negative delta. But be aware of the risk of this trade. We have a negative theta decay. And so as time goes on, this trade will lose in value. And that is why you can see the purple line, which represents the current date, drops down lower to the blue line, which represents the option's expiration date. Since these options lose value through time, the break even on this trade moves higher as we approach the expiration date. And so you can see here, even though these call options have a strike price of $13, the stock needs to trade above $14.35 per share for this trade to be profitable at expiration. And because of this risk, we only took a small position in this trade. We don't invest a lot of capital into these higher risk trades because we invest most of our capital into the lower risk, higher probability of profit trades that we share on our website. We'll put a link here where you can also learn about trading strategies to further reduce risk while increasing profits. Let us know in the comments below. Do you think Aurora Innovation stock is a good buy now? Or do you think it will crash back down? As usual, please hit the like button, subscribe if you haven't, take care, and have a wonderful day.